Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of complicated business filings. Today we are decoding WAFD INC, the alphabet soup of financial terms we're diving into. Luckily, after this video, you'll be more than ready to unravel it, that we will uncover insights on everything from their struggles with earnings to how they're managing risks, and of course we will focus on the important numbers from their financial tables before we start. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below so you can chat with fellow corporate decoders, reporting to how they're managing risks, and of course we will focus on the important numbers from their financial tables. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below so you can chat with fellow corporate decoders. Alright, let's jump right in. This is a Form 10Q, which is basically a quarterly checkup for public companies with the SEC. This report covers WAFOT's performance up to March 31, 2025. Think of it as a mini annual report that gives us a snapshot of how they're doing. As of April 30, 2025, Wat Asiyandu had over 80 million shares of common stock outstanding. This tells us how many pieces the company is divided into, which is important when calculating earnings per share. Here's where we see a roadmap of where we're headed. We'll be checking out their balance sheets, income statements, and cash flow statements. Plus, we will take a peek at what management has to say about their performance. Let's dive into the numbers, starting with the balance sheet. As of March 31, 2025, WAFD had about $1.2 billion in cash and cash equivalents. A pretty big drop from the 2.4 that's over $1 billion less. Now that sounds alarming, but we need to see where that money went to understand if this is really bad news. One place that cash went was into available for sale securities, which jumped from $2.5 billion to 3.1 billion SIG. Also up their held to maturity securities from $436 million. This tells us they shifted some of their cash into investments. It's like moving money from your checking account to a savings account. Their loans receivable, which is the money they expect to get back from borrowers, stayed pretty steady at around $9 billion. That means their lending business was stable. Now let's flip over to the liabilities side. Their transaction deposit accounts, basically checking accounts, were steady at around $11.8 billion. Time deposit accounts like CDs also remained consistent at roughly $9.5 billion. One big change on the liability side is that their borrowings went down from $322 billion to 2 news, as it suggests they are paying down debt. Overall, WAFD's total liabilities decreased from $25 billion to $24.6 billion. So while cash went down, they also reduced their debts, leading to a slightly smaller balance sheet. Where for junior subordinated debentures, a type of debt remained fairly stable. The company's accounts payable and other accrued liabilities also stayed consistent. Looking at shareholders' equity, their preferred stock value stayed put at $300 million, and common stock also remained nearly unchanged. Retained earnings, which is the company's accumulated profits, increased from $1.9 billion to $2 billion. This shows they were profitable in this period. The company's dividends also remained fairly consistent, showing it's not having trouble paying investors. Moving on to the income statement, we see that for the 3 months ended March 31, 2025, interest income from loans was $282 million, up from $274 million the year before. This indicates increased loan activity. However, their interest expense on deposits also went up from $116 million to $151 million. This is because they're paying more to hold those deposits. Ultimately, their net interest income increased slightly to $160.9 million from $158.5 million. They also had a provision for credit losses of $27 million, a decrease from the $16 million in the prior year, as they had to provision for the impact of acquiring Luther Burbank. Non-interest income, which includes fees and other income sources, increased from $13.3 million. This shows they are getting more revenue from sources other than just interest on loans. Non-interest expense, which includes things like employee pay and operating cost, decreased from $133.7 million to $144.8 million. This shows WAFD is becoming more efficient. All this activity leads to a pretty big jump in net income from $15.80 million to $56.2 million. Their basic earnings per share also increased. Moving on, comprehensive income, which is a broader measure of profit, was $54.3 million compared to $20.8 million. Here's a peek at the accumulated other comprehensive income or loss. This includes things like unrealized gains and losses on investments. Stock compensation increased to roughly $2.5 million. The treasury stock purchased also increased. Diving into the cash flow statement, there are a few notable figures. Net cash provided by operating activities was $121 million, which is $150 million less than last year. For investing activities, originations of loans and principal repayments actually resulted in a cash flow surplus. A large portion of cash flows seems to have went towards the purchasing the FHLB stock CalBU, so overall it's a mixed picture. Now let's check out the notes to the financial statements. There were losses and gains in derivative settlements. These instruments help manage risk but need to be tracked carefully. Preferred stock dividend remained consistent, reflecting a steady payout policy. I'll skip this and other sections which are boilerplate and legal disclaimers. If you are super interested in those, just pause and check it out here. This section has a bunch of accounting jargon. This section relates to the purchase of Luther Burbank Corporation. We've already touched upon this earlier. Moving on, the team mentioned the following sections which they do not expect to have material effect in this financial report. This section defines the gain-loss on derivative instruments. This lists all changes to equity that occurred during the reporting period. Now for a quick snapshot of WAFD. Overall, it's a very stable business that is unlikely to moonshot. Their main goal seems to be stability and long term. They've taken steps to rebalance the portfolio, which makes sense given the current environment, and are paying a healthy dividend while doing so. One thing to note is that the team is seeing regulatory risk as a problem, but the overall rating should improve in coming years with a bit of effort and attention. Alright, that's our breakdown of WAFD's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into the corporate world. And don't forget to check out the Discord in the description for even deeper discussions. Thanks for watching. See you next time.